All right, that is the word coming in from IIFL Securities. But continuing our focus on Kotak Mahindra Bank, Abhishek is also joining us to really explain the key investor concerns here. Abhishek, this is a stock that has underperformed. So take us through what the fundamental triggers from here can really look like for Kotak Mahindra Bank.
So the first concern over here is that the change. So MD change is the concern on investors' mind, given the fact that investors would like an internal candidate, which would mean more continuity. So market investors, let's say, are waiting for outcome of continuity, and they would cheer if an internal candidate is elevated. Now, secondly, on the fundamental side, the general perception is that the cost of funds for Kotak Bank is better than any other bank in the country, especially on the private peers. So quality of CASA, however, is on the lower side than peers. Now we know that 811 has had a big traction, but with lower balances. So customers are generally searching for yields. HNIs do search for yields as and when the cost of deposits go up or the interest on deposits go up. They tend to switch from their saving account to term deposit. So in the overall CASA picture, Kotak has more of saving account than current account. So current account is sticky given the fact that these businesses do have regular business with the bank, so they tend to remain stickier than the saving deposits even in a rising interest rate scenario. So that movement actually can hurt Kotak Bank. Last quarter also we saw the CASA ratio declining to 53.5% from the 56% that they had in Q3. So incrementally, going from here, the cost of funds could rise faster for Kotak Mahindra Bank than its peers, as the customers would switch out to term deposits, or they would have to raise more money to meet their overall CD ratio or credit deposit ratio. Now, mind you, amongst the top four banks, Kotak Mahindra Bank has a CD ratio or credit deposit ratio of more than 90%. So to meet the incremental loan growth which is happening at a rapid pace in the industry, they would also need liabilities coming in to meet the outgo in terms of loan growth. So they would need strong deposit flow, and in a rising interest rate scenario, you tend to have more of term deposits. So going ahead, the cost of funds can hurt Kotak Mahindra Bank.
Okay, all right, Abhishek, got that. It's a fair point, worth keeping in mind. But today, of course, the stock is reacting well to those technical factors because of the expected increase in weight on the MSCI indices. Thank you very much, Abhishek, for joining in with the fundamentals. We will